and welcome to your daily Game Biz Sizzle with me, Jon Jordan. Today we are considering Angry Birds publisher Rovio and its announcement of its IPO at some point in the future. The date's not been set, but at some point in the near future it will IPO on the NASDAQ Helsinki exchange. Over the years, Rovio's IPO has been rumoured and conjectured about many times. So I've put together this graph of Rovio's sales and profits going back to 2010 so we can get some sort of context about why Rovio is now looking to IPO. So if we look at our graph, a fairly straightforward one this time. So in blue we have Rovio's sales, and in red we have Rovio's profit before interest and taxes. So slightly complicating things, you can see on the blue columns from 2013, those are split into a light blue and a darker blue. So at that point Rovio broke out what proportion of its sales came from its games and what proportion came from other elements of its business, notably licensing, and obviously now it has the Angry Birds films and that kind of merchandising, that sort of thing. So let's start at the beginning. Let's go back to 2010, where we can see Rovio was it was profitable, but a pretty small company, so well under 10 million euros of annual revenue. What happens in 2011? We have this explosion, so sales grow tenfold, and profit grows much more. And obviously, what's happening there is we have the release of Angry Birds as a paid app on the, particularly on the Apple App Store. And then the Google Play Store, and you have this explosion with Angry Birds. Angry Birds is the mobile game phenomenon, everyone is playing it. And effectively that kind of trend continues into 2012. So 2012 again we see sales pretty much double, up to 150 million euros. And I guess more importantly for a company, profits continue to rise. So we've got profits getting on for 80 million euros. Now it's pretty clear from this graph that 2012 is the high point of Rovio as a company. Not that its sales won't increase in future, its sales clearly do increase from the 2012 figure of about 150 million euros. But if we look at the red column, that's profitability, and what we're seeing there is a strong decline. So 2012 is, we can call it maybe wrongly, but peak Angry Birds is a nice meme, isn't it? 2013, the company is still growing, so we see sales now well over 150 million euros for the year. And profits, it's still profitable, but now profits have fallen below 2011's figure. So what's happening in 2013 is Angry Birds, the brand, all the merchandising, the games still coming out, that's still driving overall sales, but the company has got inefficient. It's hiring too many people. At that stage it had over 800 staff. And that kind of impacts on profitability, which is kind of, we can, lots of ways of thinking about profitability, but the clearest way is profitability is the efficiency of a company in terms of turning revenue into free cash that it can do something else with. 2014 we can start to see problems really for Rovio. So we can see sales have dropped for the first time in this little graph. What's interesting though is if you look at the darker blue line, that's game sales, so the sales of mobile games, that actually continues to rise. So even actually throughout the history of Rovio, its games division has always increased, at least in this kind of time frame from 2010. The problem the company has had has been with its non-game activity, so its merchandising, its licensing, all those things which are actually much harder to monetize than games. So 2014 we can see sales have gone down, still profitable, but now profits have dropped off tremendously. And then by this stage Rovio is starting to kind of restructure, and layoffs are happening. And clearly something has gone wrong at the company, and it's starting to look at kind of management restructure. 2015 is the turnaround year, so we can see sales down again for the second year in a row, and for the first time it makes a loss. So why is it making a loss? Partly because sales have gone down, so it has a kind of cost structure that is assuming sales are going to go up, so that makes it loss-making. Also, big restructuring at this point. So the majority of its staff are in Helsinki or near Helsinki in Finland. Espoo is kind of kind of a location just outside Helsinki. And obviously, when you're laying people off in Finland, they have quite strong kind of redundancy packages that are mandatory. So we start to see loss making from restructuring, and obviously the kind of wheels falling off the merchandising sales for Angry Birds. Of course, if you're a loss-making company, you can't really IPO, or certainly if your growth is dropping off and you're loss-making, you can't IPO. So for Rovio to plan to IPO in 2017, we need the kind of the turnaround year, the 2016. So what we see there, dramatic rise in sales. So we see sales are now an all-time high, so approaching 200 million euros there. And we can see also as well that although games have always been kind of the largest component, games are now a very big component, like 80% of Rovio's business comes from its mobile games, and that's seen considerable growth from 2015. Back to profitability, I mean not massively profitable, if you look even compared to 2011, 12 or 13, but it's more profitable in 2014, and clearly what you're looking for when you're IPOing is you're talking about momentum and growth. You are talking about profitability for a company that's been around for a while like Rovio, but we're definitely seeing now, if you want to invest in this company, IPO is people buying shares, people or investment companies buying shares in a company they expect those shares to increase in value. So you want to see a growth story, and definitely you want to see profitability, because that means the company has money to invest and do other things with. So that's the background of Rovio's IPO. Go into a little bit of detail about the IPO itself. There seems to be some confusion about what's going on here. So what Rovio is doing is it is creating 30 million euros of new shares, so shares that didn't exist before, and it's selling those on the open market, in this case the NASDAQ Helsinki market. So individuals and investment companies can buy those. So that's new money it's raising, that it will kind of keep that money itself as a company. Not just selling 30 million euros of shares though. What else is happening is existing shareholders are also going to sell some of their shares. We don't know how many at the moment, and clearly when they're selling their shares, that money doesn't go to Rovio, that money goes to the companies that hold those shares. So Rovio's share structure is interesting in the sense that the biggest shareholder by far is the kind of company run by the father of the one-time CEO. So the head family, their father is a billionaire anyway through various other investments, and his company holds the majority of stock, over 80% of the stock. So he's going to be selling some shares. There's also some VCs involved who've invested in the company over the years. They're expected to sell some shares, and also some of the existing management. People like the Mighty Eagle, Peter Vesterbacker, Nicholas Head, who's the creative director there. They have a shareholding as well. They might be selling some of their shares. So there's been some headlines, Rovio selling, Rovio valued at kind of 30 million euros or something. That's not the case at all. Rovio is selling 30 million euros of new shares. There will be probably more than 30 million euros of existing shareholders selling their shares as well. But that money doesn't go to Rovio. What the IPO does, however, is it lays down a kind of a forward-looking kind of business for Rovio, that they can now obviously going to get 30 million euros of money to spend if they want to. And also it means that people internally in the company who have shareholdings, previously they couldn't sell that off. It's quite hard to sell shares on a private market. Now, kind of, I imagine it being Finland, all employees of Rovio will have some shares, so they have that ability now to kind of cash in. Also because obviously shares are driven partly by company fundamentals and partly by sentiment. It gives the employees of Rovio who are working hard to make the company a success, it gives them a bit more involvement in the reward structure if the company does well. The final thing to add, which is interesting about Rovio's IPO, is what it says it will do going forward. So clearly we can see from this graph that Rovio has a history, and it has momentum going forward, but it can't really say it's a startup. Sales are at their all-time high, but profits aren't, and maybe profits won't reach that kind of crazy level of 2012 when, let's face it, the App Store was fairly new, paid games were the big thing. That's not where we are at the moment now. App Stores are massive, sure, but it's all about free-to-play games now, and Angry Birds is something everyone knows about, but it's not kind of a exciting phenomenon like it once was. So what Rovio has said is it expects its growth to be kind of faster than the growth of the mobile games market itself. So it does expect to be, a growing company, but it doesn't expect to have this kind of crazy growth from certainly when it went from 2010 to 2011 to 2012. It's not going to have that, hockey stick 10 times growth. And because of that, it said that it will be giving 30% of net profits will go back to shareholders in the form of dividends. The dividends are interesting and something that people investors like to talk about a lot, but they tend to come from companies who could consider themselves mature, so that they will have growth but not kind of crazy levels of growth. And so dividends are normally a once yearly or sometimes twice yearly payment to shareholders for holding those shares. So it encourages people to hold on to shares. It can be considered as like an interest rate. So you're holding the shares, which may go up or down, but by holding the shares, you will also get some extra money just for having it. And it obviously stops people kind of selling shares. Because they want to hold the shares for the dividends, although there's obviously kind of ways around that. You can buy and sell at different points of the year. Anyway, but this is kind of interesting, I think, because it shows the mentality of Rovio that says we're not going to be a high-growth company in the way we were previously. We're going to be a mature company. We're going to be a well-structured company, and we, promise to give, if we can, assuming we don't have some terrible year, 30% of our net profits will be given away to shareholders to help them, to hold on to our shares. So that's quite interesting. There's not many games companies do pay dividends. So Activision Blizzard are the biggest Western games company. They do pay a dividend, a fairly small one though. Certainly nothing like 30% of net profits. So that I think kind of shows the mentality of Rovio, that it kind of knows what it's doing with this IPO, and it's not kind of maybe like some IPOs we've seen in the past which haven't done well with games companies. I mean, back in the day, King and Zynga being good examples of companies that kind of oversold themselves. We're not seeing that with Rovio. I think they're being quite pragmatic, quite conservative in how they look at the future, although they do have this nice momentum story going forward. So there you are with Rovio. The other thing, obviously, we don't know is when it's going to launch, and also we don't know the price of its stock. So that will give us the overall valuation of the company. So companies are valued by the number of shares times the price of the shares. That gives you the market capitalization. That's always kind of an interesting thing. Because you don't want to price your shares too high, because then if they don't keep kind of going up in price, and people don't want to hold them so much. And you don't want to price them too low, because then you're effectively kind of you could be taking more money out of the IPO. You could be getting more money off investors if you price them too low. So there is a kind of an interesting discussion to be had about kind of pricing IPO stock. We won't go into that anymore. This video's long enough as it is, but certainly we'll probably come back and revisit this when we get more details about Rovio. But at the moment, it seems like a fairly sensible move for the company. So anyway, this is your daily Game Biz Sizzle. We try and do these videos about what's going on in the business world when it comes to computer games and mobile games. So don't forget to subscribe to our channel, and thanks for watching the video.
Hi, and thanks for watching right to the end of the video. We always like to see your comments, so please put them in the comments section below. And don't forget to subscribe. And check out some more of our other videos about the mobile games industry. There's two really good examples on your screen right now.